What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals, where I give you the technicals in 10 minutes or less. And I always say this, if you can't figure out the technicals in under 10 minutes, then you've got way too much going on in your charts. Today, it's all about the NASDAQ futures, NQ1 exclamation point here on TradingView. That's the futures markets, the NASDAQ 100. I think it's headed to 18,450, and I'm going to tell you why. Also, want to quickly mention if you are on TradingView and you're looking at futures markets and you want to trade them on TradingView, go to tradestation.com/Anthony. You can get 50% off the brokerage fees for the lifetime of your account, and you can connect your TradeStation account right to TradingView. Now, let's take a look at NASDAQ 100 futures here on the charts. And this is something that we've seen time and time again on my charts is where you have a market that is testing the year-to-date VWAP, which is the orange line you're going to see on here is the anchored VWAP to the beginning of the year. It tests it. It starts to hold above it. I had a 5-day moving average, which is the red line. Bollinger Bands start to open up like a mouth. As you can see, the Bollinger Bands opening up. I have the arrows drawn, and that indicates range expansion. So you come off of a little bit of a pullback in a bull market, and we get all these things starting to line up above the anchored VWAP, hold that above the 5-day moving average. Also see the Bollinger Bands opening up like a mouth. And we go back and test the previous peak high in the Bollinger Bands. What do I mean by that? First off, when you're looking at the Bollinger Bands, it's 20-period 3 standard deviation. That is the setting here on TradingView. I'll double click on this just so you can see it. I know I get a lot of questions about this. 20-period 3 standard deviation. And what I look at is the previous peaks as unfinished business. What do I mean by unfinished business? I mean, it's a level that the market potentially could go and trade when a market's moving up like it was in the past here, because it's a 3 standard deviation move away from the mean, which is just a 20-period moving average on a Bollinger Band. And the market didn't quite get there. And then the market starts to pull back. It restabilizes itself back above the anchored VWAP for the year, back above the 5-day moving average. Bollinger Bands start to open up and start to expand outward, indicating range expansion. And bang, we go and trade it. So I'm going to draw my little oval here and show you what we did earlier in the year. And I think that we're in the same type of situation right now. If you go back and look in the middle towards the end of January, this is the beginning of January right here. Market came down, held above the anchored VWAP, eventually above the 5-day moving average. And look at the Bollinger Bands. They went from contracting to expanding, and we went back and traded that old peak, right? Unfinished business. See how it went right to it? Bang, bang, and then came back to the 5-day. Eventually, we ended up going higher again. But look at what happened. Market went higher, made a 3 standard deviation Bollinger Band peak right here, which comes in at 18,454. Markets contracted, mean reversion, went right back to the anchored VWAP for the year. Okay, let's take that right now, and let's draw an oval again. Let's project out maybe a week or so from now. And we're back in that same look that we were here. I mean, it's very similar. You're never going to get something that's exactly perfect, but history repeats itself a lot with technicals. That's really all we have to look at anyway. So anytime you're looking at technicals, I like to look for repeated patterns. Couple things that we have to notice as well. Primary trend is up. So I look for a repeatable pattern to the upside. What did we do last time? What did we hold last time? Where did we eventually go? We held the anchored VWAP from the beginning of the year, which is a good place to look at. It's just a volume weighted average price from the beginning of the year. And I think it's a good metric to see if the buyers are winning or the sellers are winning. It's not the holy grail. It's not the end all be all. But when price defends it, that's information. Then I like the 5-day moving average. I've always looked at the 5-day or a 10-day moving average. To me, 6 one, half a dozen of the other. I like the 5-day just because it helps me really with the shorter term price action, help me gauge how strong price is. And you can see every time we've regained it, not every time, it's only been once this year, and we're on the second time, we've gone up and made a new high. And we've gone and tested that previous peak, which to me is where the NASDAQ is headed. And I like that as a target because my thinking with this is anytime you have a strong move in the market's making highs, that 3 standard deviation, where that market starts to contract from, shows you the power of a move. That's why I call it unfinished business. So if the power of the move was 3 standard deviation back when we made the high not too long ago, actually, for the year, when we get it back above that high, like we recently did in the previous session, the market can expand up into this point. And what's interesting about this thinking as well is that anytime you start to see markets making higher highs and Bollinger Band peaks making higher highs, you look to see how wide those peaks can get. And it tells you a lot about the market environment. And what's happening here is it's relatively tight. That price from right now is 420 so odd points away. That's really not that far in the NASDAQ. And when you go back and look here, at the time when this started to happen, it was a lot further. It was somewhere around 500 or 600 points, maybe when we got that signal that that potentially could happen. And what that tells us about the market environment is it's getting a little tighter and it's going to be a little bumpier, which is why right now I think it's going to be a kind of a grind up there. And I think I'm using options because of it. Intraday, I'll use futures as well. I just won't keep them overnight because I think it could be choppy along the way. And what's really the most important part about this trade right now is not necessarily where I think it's going, it's where I think I'm wrong. So the dotted lines that you're going to see on here are my beacon indicator, which is free on TradingView. And I'm going to show you real quick what they are. I'm going to take a fib tool and I'm going to overlay those lines so you can see what they are. And what all they are is 30%, 50%, and 70% of the Bollinger Band peaks. Now I take the peak from this area right here and I draw to the peak right there. And the reason why I do that is because it boxes in all of the market volatility. And you could see we're in that top 30%. And anytime we get in that top 30%, it's really typically a grindy type market. And it tells me that we want to try to almost capitulate a high and maybe go up to this 18,454 target. But I do think it will be bumpy. I do expect it to be within the next, I would say, 2 weeks. I mean, I'm hoping sooner because I'm already long. But ultimately, I do think by the time we get to rollover, which is just a couple of weeks away, which we're going to start moving into the next month in the NASDAQ, hard to believe we're going to be through Q1 already. I mean, we're going into the June contract coming up. Right now, we're in March. And so I think that it'll happen probably by then. And where I'm wrong is just below 17,680. That's that 30% line. I don't want to risk all the way back down below the anchored VWAP. I love this as a good low because the fact that the market held this anchored VWAP and exploded off it, we also have this gap up there. I don't want to be long if we start getting into that gap. That gap comes in right around 17,700 and change, but 17,680, if we were to violate that, I would be wrong. And so you're looking at from where I got in, it's just right around 300 or so points for the possibility to make, let's call it 500 points, right? And so the risk reward, I think, is there. Anytime I can get even 1-to-1 is pretty good, but I like the options market, options on futures markets for this. And intraday, I'm only looking long. I talk about this in my free Discord note every day in the NASDAQ because I think it's going to hit that objective of 14,450. But below 14,680, we can fill that gap. We can go back and retest 17,397, which is the anchor VWAP. But very similar scenario that we saw earlier in the year. And also one final thing is look at the explosion the days following hitting that anchored VWAP. I know this was because of NVIDIA. I understand that. Obviously, NVIDIA was a big part of this rally, but timing's everything. And if you get a big NVIDIA rally off of a strong low, which I consider a good low with the anchored VWAP for the year, that just tells me it's even going to propel even further. I don't even necessarily know that NVIDIA needs to explode with the NASDAQ higher, but I just think that ultimately this really gave the lift to the bulls. And I think that we reevaluate when we look up at 18,454. That's my thoughts right now on NASDAQ. I keep it super simple here in 10-minute technicals. You can follow me at Anthony Crudele on Twitter. Go to anthonycrudele.com and don't forget to check out tradestation.com/Anthony. You get 50% off the brokerage fees for the life of your account, and you can connect it right here to TradingView. Until next time, everybody, trade well, be small and smart. I'll see you next time.